Hi guys, welcome to Trading Ki Baat. Hope you're all doing very well. Today we have a special star trader with us to teach you secrets of the trade, how to put in trades, and how to use one of the most widely adopted strategies, that is the straddle. So let me introduce the man himself. Let me welcome Saketh. Saketh is with us. Hi Saketh, welcome to Trading Ki
Hey
Baat. How are
Arjun,
you?
I'm doing great. So, how are you? Pleasure being with you on the show, first of all, and thank you so much for having me.
It is our pleasure to have you on the show and to learn something from you. So, Saket, before we begin, our viewers, I am sure they are very interested to see a young trader with us. And guys, he looks young, but he's full of experience. He's been trading for a long while. So, Saket, why don't you tell us how did you begin trading and how did this journey that you started years ago and now you are, trading at a very good level where you, I'm sure, are making crores even. So, how did this journey start and how did you reach where you are today?
This journey started, to be precise, exactly 10 years back in 2013. And my father was actually an investor. So he used to invest in the market, and I had no idea to get into markets or even start trading. So while he was doing that, I was pretty curious to know what exactly was happening. And the first thing what he told me was the basic idea of putting money in stocks is okay, the stock price is going to go up and down. So you buy it when it is lower and you sell it when it is higher. So then I asked him, okay, is everything available on stock market? So he told, yes, more or less whatever you see around is available. And that time, like I was a gamer, so I was like, okay, does Xbox also trade on stock market so I can purchase it when the price is lower? So that's how my journey began, getting into stocks. As you can figure out that I was so naive that I thought even Xbox PlayStations also trade on the market, right? So once I came into market, in the sense I started investing with few hundreds and thousands, and after that I realized that the stock prices were going up and down every day by 1-2%. So now I thought, okay, investing money in the market, you make just around 10-15% a year by keeping it like year over year, you just make 10-15%. I thought, okay, if the stock is moving 2-3% every day, higher and lower, right? If I am able to capture even 1% move every day, right, I will be making 365%, assuming that market rates on every day, right? So even that was very naive and you can say a dumb logic to approach market, expecting to double your money or even triple your money every single year. And as it turns out, so these dreams never come true. So you are definitely going to get hit. So then, so two almost 1.5-2 years into equity trading, so then you realize that okay, you're not making any money, so you're just losing month over month and quarter over quarter. So that's when I came across options. So stock is moving 1% a day, whereas your option is moving 40% a day, 100% a day, right? So this started to look much more lucrative and much more as a better option compared to what I was doing. So that's when I shifted completely from equity to options. And again, option buying, as you know, it's very good on paper, but when you actually start trading, doesn't work out the way you expect. So another 2.5 years of continuous losses. So I started buying, but never made consistent money. So almost after 4.5-5 years of making losses, from 13 all the way to end of 17, mid to end of 17. So then finally I got into option selling, and that's how from there on the consistency started to come with trading, and that's how the journey has continued.
Great. Wonderful to hear that, Saket. I think we all have been introduced to the markets in some or the
Right,
other way through
right,
investing.
right,
And that lure of catching
right.
multi-baggers, that often introduces you to another segment, that is
True, true.
options, where you see multi-baggers
Every
being
day.
formed every day in option prices. So yeah, it's a very interesting and a very engaging field to be in. Saket, you know, as far as I know, you do straddles
Yes.
extensively, and it is one of the strategies It is also my favorite, and I'm happy to be talking to someone who also shares the same passion for straddles. Sakit, before we begin, you could, if you could please give a very small brief on what straddles are for someone who might be new watching this, so we can move ahead with the
Sure.
advanced stuff then.
So I'll just tell you what straddles are and also how we started getting into straddles. So because whenever you come into markets as an option seller, so you generally would prefer staying OTM or out of the money, selling small premiums. So then what actually made us come towards straddle is also something I'm going to share. So straddle is basically a very simple range bound strategy. So that means whenever you create a straddle, you expect the market to stay in a particular range. So the range can be big or the range can be small. So the range can be anywhere around 500 points up or down. It can also sometimes extend to 700 points up or down, or even 300 points up or down from the current level. So as long as the market stays in this range throughout the week, you are going to make money. If the market breaks out of the range, you are going to lose some money. So that is the basic idea of straddle. And how we actually got into straddle is also a pretty interesting story. So it was all thanks to the leverage being dried up in 2020. So before which we just used to do far OTM selling, especially on expiry days alone. So on expiry days, we used to sell options worth 2 rupees, 2.5 rupees, keep double the stop loss, and just let it run till the expiry. So it was a very simple trade. It just came with 1:1 risk to reward, right? So you either made 2.5 rupees or you lost 2.5 rupees. But the best part is it came with around 80% probability. So very simple trade. You were making with 20-30x leverage being there. You were easily able to make 1.5-2% every week on the days you get it right, or you were losing 1.5% on the days you get it wrong. So that's how we were trading throughout 17, 18, and 19. So as the leverage started to dry up, so we had to find something better. And that's when we thought, instead of shorting, say, 20,000 quantity, and where I collect 2 rupees, right? So I would maybe rather short something like 200 quantity and collect 200 rupees. So here you can see the entire perspective starts to change. Your quantity is just 200 quantity, and you're trying to collect 200 rupees rather than shorting 20,000 quantity and collecting 2 rupees. End of the day, you end up making the same 40,000. So this is how we started to shift to straddles. But as we did, obviously, again, we have lost a lot of money in this process. And now we have a sort of a framework built around based on which we trade straddles. So we do both straddles and strangles. So we have a framework when we enter straddles, when we enter strangles, and how we adjust and exit.
The era of
Yes,
high leverage. I believe in 2017, 2018, if anyone has traded, they used to offer you 30x to
right,
40x leverage. I'm sure people who have started trading recently won't believe that. But yes, I think you just needed to have about 2000 or to
right.
2500 rupees in your account to trade to short one
Yes,
lot of straddle.
yes,
That is all. The 1.5 lakh approx it takes right now, it just used to be
right,
two and a half
right.
thousand rupees. One small move and your
True,
account was wiped out.
true, very true,
And that is how people lost money
true.
and people made money. It went both ways. Obviously, it goes without saying that majority lost. But then, yes, Saketh took advantage of that high leverage and made lots of money and compounded his capital. Great to hear that, Saketh. So, when it comes to straddle, Saketh, like, any strategy, I believe has
Right,
three components. And one
right,
is your entry, the second is what you
right,
do post entry, say managing the trade, and the third is planning an
right.
exit for the trade. Now, I would like to know about all three
Sure.
from you. How do you approach all these three? So, if you begin with the entry, when do you enter
Okay,
straddles?
so let me just give you a very basic framework on how we trade straddle. So the thing is, there is no specific thing saying that, okay, I am going to enter on a Friday morning or a Thursday morning. So nothing specific as such. So I sometimes end up entering at any random time I want to create a short straddle. So for
Okay.
example, let's say Thursday I'm trading expiry. And so if I feel or if I see that there's a good opportunity, I enter next week's straddle then and there along with the expiry trades. or maybe I might close the whole trade and call it a day, and next day I can end up entering one more straddle. So there is no particular thing that okay, this is the time when I enter, but definitely there is a particular so not time, but a rule which we follow to basically enter the straddle. So let me just share the screen here. So I think that would
So while you share the screen, I have a point to make for the viewers that Saket is a discretionary trader. Unlike systematic traders who have fixed entries and exits, Saket is very flexible with his entries because he uses his discretion to plan his entries. So that is why he was saying that he can enter at random times. There is no fixed time, and he can also exit whenever he wants to, whenever he feels is
right.
right to exit. So that is a flexibility that he has as a discretionary
Right.
trader.
Like how you mentioned, we do a bit of both, but mainly discretion, because we feel that, okay, at the current level of capital, the returns what we are able to generate from discretionary is slightly higher than system. So we are traders who are not against the system trading as such. So I just wanted to make that clear, but we still prefer trading discretionary for the current capital. So
We all have different
yeah.
styles of approaching the
Very true,
markets.
very
Yeah.
true. So let me just share the screen. I hope the trading view tab is visible. So this is the chart of Bank Nifty, right? And so today, let's say I have to take a straddle for uh, Thursday. So would I be comfortable taking a straddle now, or let's say would I be more comfortable taking a strangle? So that is something which I'm going to discuss. So before which, let me just clear everything, whatever you see on the screen. Let's just keep a simple plain screen, right? So the thing what we follow is actually fairly very simple. So first, we are simply going to come and see where is the support and resistance. So where exactly can the market end up trading? So I can. So one thing what you have to note here is you need to have view for the moment. It might be totally wrong. It might be totally right. So it doesn't really matter, because I will tell you one thing. So 90% of the trades which you enter is not going to be the same by the end. So either you would have exited, or either you would have adjusted and made it into a completely different trade. So I'm pretty sure even you would agree with that if you trade strategies discretionary. Uh, so as and when the market moves, you tend to adjust it, and it completely becomes a different trade. So here, just by looking at the chart, basically, or maybe we can come to a broader time frame so we can see a bigger chart. Right? So let me just put this chart. So if I have to mark support and resistance on the broader level, so let's say 39,600, I would call it a support. And on higher end, so because the market took support here multiple times and it finally broke, so I will give it 41,100 as a right now. So I would call it a resistance, right? So this is a very broad support and resistance what we have marked. And the thing is, what we have to look at right now is, if we create a straddle right now, will it be able to cover this particular range of say 41,100 and 39,600? So let me just end up creating a straddle here. So let me just change this to Bank Nifty, and let's say end up creating a straddle here. So you can see that my range, what I believe to be the support and resistance, is not really covered in this particular short straddle, right? So I believe 41,000 to be a good like resistance, and 39,600 to be a good support. But unfortunately, the range is not covered within the straddle break even. So you can see the break even is 39,800 and 40,700. So that means this week I would be more comfortable doing a strangle, say something like 39,600 short and 41,000 or 4,900 short directly, rather than doing a straddle. So this is one important thing. Even though we are non-directional, so there is a specific time when we choose to go with straddles or strangles, right? So I think
So Saket, your preference is that whatever support and resistance
yes,
levels you draw, your break even of
yes,
the straddle or strangle should be outside
Exactly,
those levels.
exactly. So now the thing is, if I have to be no, okay, let's say I'm trading the expiry day, right? So then it doesn't make sense for me to have such broad support and resistance. So if today is Thursday morning, then obviously expecting a 800 point move in Bank Nifty is it might come once in 3 months. It is not something you would expect to happen quite often, right? So let me just come to a shorter time frame to make you understand the same thing better, right? So let's say I was trading the expiry. So now, if I look at this particular chart, I would simply mark a resistance at 40,400 and I would mark a support at maybe so around 40,050. So let's keep it like 40,050, 40,060. So I would be more interested in this range because today also the market has taken support from here, bounced back, and you can see there are multiple resistance that the market has faced, right? So given this scenario, let's say I did a 40,200 short straddle. Obviously, the premiums will be much different than what it is available right now. So let's say it was available at 120 and 140, right? So you can see at this point, uh, right over here. So when I have created a 40,000 short straddle, my break even is covered well within the straddle range, right? So you can see on the downside it is 39,940. So on the upside it is 40,460. And the support, it's well beyond the support and resistance what I have marked. So this is one thing which I would be comfortable holding right now. So if in case assuming this was the expiry and I had taken this straddle, because it comes beyond these two ranges, so I would be more comfortable holding. So this is a simple criteria when we enter a straddle and when we enter a strangle.
Good explanation, Saket. I think that gives a fair idea of how
Yes,
you choose strikes along
right,
with when you enter. I think it is important to also know what strikes to enter, when to enter a straddle, when to enter a strangle. I think you've given a good idea of that. Now, Saket, if only the
right,
markets were so easy that you would simply put a trade and the premiums will melt to zero.
right,
That rarely happens. So once you enter a trade, obviously with straddles and strangles, we have to do some kind of adjustments. There are few days where you
right,
don't need to do
right,
anything, but God is rarely so kind. The
right.
markets are rarely so kind. So how do you manage once the price approaches your
Right.
levels, your strikes? How do you adjust your strangles? How do you manage your
Okay.
delta?
So yeah, before coming to that, I would also like to tell you one more way when exactly we enter straddle. So this is one what I discussed, right? So one more way is let's say the market comes to 39,700. Okay. So because I know for a fact that the market has taken so many supports around 39,700, so definitely I would be expecting a bounce back. So the market might bounce or it might crack from there or and start falling maybe towards 39,400 or 39,300, whatever it might be. So let's say the market is trading around 39,700. So the probability wise, there is let's say a 60% chance that the market might bounce from there and move towards 40,000. And there's a 40% chance that the market might actually break 39,700. So even in such cases, what I would usually do is simply create a 40,000 short strategy, right? And I would be entering when it is around 39 720, 39 750. So I would be entering around this range. And the moment market breaks and stays below 40,000, sorry, 39 700, I will simply exit it. I will be booking a loss, a bare minimum loss of maybe around 20 30 points. But if you actually look at the risk to reward from this particular point, in case if the market actually ends up bouncing towards 40,000, you're simply going to make around 150 200 points straight away on the straddle. And if the market fails to bounce, you will be losing around 30 40 points. So the risk to reward by default, you will be getting close to around 1 is to 6, 1 is to 7 risk to reward. And in such cases, when the market is at like very important support zone, very important resistance zone, even if you get one out of three trades right or one out of four trade right, right, you are going to make really big money just by following this simple straddle approach also. So Why we enter straddle and why not short put is because we know that, okay, even if the market fails to hold and starts cracking, there is this call leg which is definitely going to help you save some points, if not a lot of it.
So
Yeah.
not just delta neutral, you can also go
Exactly.
directional
You
with
can also
straddles.
go directional with straddles, and we do that many times. To be honest, so oftentimes when they break or they are close to nearby support and resistance, we end up creating short straddles. So
I think that's a good way to trade. And often, people also have a slightly
yes,
bullish
yes.
bias or a slightly bearish bias. So you can adjust the strikes a bit as per
Yes,
your
yes,
view on the
definitely.
market.
So, to be honest, more than being delta neutral, so we often go fairly directional. So, right now, maybe till this particular level is broken. So, I would like to create fairly bearish short straddles itself, maybe around 40,200, 40,100. If I am doing next week. Supposingly, I was doing March 9th, right? So I would be more comfortable doing a 40,100 or a 40,200 short straddle till this particular level is taken out decisively. So again, that would be also a directional short straddle itself.
Very interesting view. And I think not many follow this way of going directional with straddles, because straddles traditionally have been thought of as a strategy and also have been thought of as a strategy that is just for going
Exactly.
neutral
Yeah.
on the
Yeah.
market when you don't have any view on the market. But as you rightly pointed out, there are ways to keep a directional bias and use that
Right.
to trade
Very true.
straddles.
Very true. And yeah, before I am so sorry that I am actually slightly deviating. So I would also like to tell one more thing. Uh, so before I actually move towards adjustment. So the thing is, right now, because the market is at such a we have seen a pretty good fall in the market all the way from 44,000 towards 39,000, right? So the thing is, even if you go by the mean reversion or anything of that sort, let's say assuming the market takes support here and you're expecting a bounce back, so you just look at the risk to reward at this particular point, even going something like a March end, right? So let me just come to March end. So, assuming that you expect a recovery to come in maybe during the later half of March, so you can simply create a 41,000 short straddle or even a 40,000, 41,200 or a 41,500 March end short straddle. So, again, you can see this is a complete directional short straddle. And the thing is, the best part is about the risk to reward, what you will be having by creating this particular short straddle. So you are expecting by creating this, the market is actually going to bounce towards 41,000, and that's where you are going to get your highest profit, right? So assuming that I have done a 41,000 short straddle, and the market actually comes towards 41,000, you're going to make 33,000 rupees. And 39,700 is a very good support. So you can give some room, say 39,500. So tomorrow, if market goes to 39,500, you will be losing somewhere around 6 to 7K. But if the market comes in your favor, you will be making somewhere close to around 33, 34K. So that is again a risk to reward of 1 is to 6. So you can take such directional bets also with long term options. So you can simply end up creating long term short straddles so that you get higher premium and it also covers your range. So I'll with that I'll just be going towards the adjustment. I'm sorry I took up so much time.
No, sorry, there you are sharing your experience, and seldom do people exactly tell what they do, and I think you are sharing that, so it's great to hear.
Yeah, so these are the different kinds. What we mainly do with short straddles, it can be directional, it can be non-directional, and it can also be long-term short straddles, which we do, which will be mostly directional. So whenever we are, just to give you a brief, whenever we are going for 1 or 2 days, right? So what do I mean by 1 or 2 days? Let's say today's Thursday. I would like to stick to non-directional. Or let's say I'm trading Wednesday, Thursday. I would like to stick to non-directional because the premiums are so low. Whereas, let's say I am entering Friday for a week, like this week short straddle, I'm entering the previous Friday. So that time I might stick to directional because there is some good amount of premium for me to give sufficient room before I actually end up adjusting and so on. So now I'll just come to the point of adjusting the straddle, right? So let's say I have done a 40,200 short straddle right now, right? So these are my break evens. So let me just give you a very simple framework on how you can end up adjusting this particular short straddle. So I think we would be doing a 40,300 short straddle because market is at 4282, right? So let's simply create a 4300 short straddle. Sorry, that is 400. So you can see the premiums are also balanced and your break evens are also quite far apart, right? So this is a fairly simple short straddle which you can end up creating. So now comes the point of adjustment. So we must be clear of one thing. So even though the break even is at 4709 and 39,891, so very rarely we can hold the straddle till that point, because if you actually end up holding till this point, you are going to bleed very badly. So your profit is actually not going to be so much. See, as you can see, this is your break even. But assuming that you end up reaching here tomorrow itself, you're actually going to be at a loss of 2,000 rupees. And hardly anybody trades with one lot. Or let's say, even if you trade with one lot, you'll be losing 1% if you reach your break even tomorrow. But in reality, if you wait till expiry, you won't be losing money, right? So obviously, if a movement comes, you can't hold short straddles till the break even. So you have to take some action before it even reaches here, right? So as the market starts to move, so I have put Wednesday, say tomorrow. So as the market starts to move, so it's good for me to adjust sometime before the market even approaches this particular point, maybe somewhere around 40,400 or maybe somewhere around 40,500 when my profit is still intact. So that's the reason I have to mark my closest support and resistance level from the current point. So again, here I would be marking 40,400 and I would be marking 40,073 or 40,070. So because these two have acted as a swing high and swing low, and the market has traded in this range for quite a couple of days, I would say. So this is from 23rd. So today we are at 28th. So the market has traded in this range yesterday and today completely, if you actually look at it. So till the market either breaks this particular range on the higher end or this particular lower range on the lower end, I wouldn't be doing any adjustment, right? So now let's see. Tomorrow, if the market comes to 40,070, I would be still at a profit of 1,700. Or let's say the market goes to 40,400, I would still be at a profit of 2,500. So this is the most important thing that you can see while I am adjusting this short straddle. Even though they actually breach the points what we have marked, I am not at a loss. That means I can book the profit and simply not do anything. If the range is broken out, I can just book the profit and not do anything. But obviously, I will be teaching you one small adjustment what you can end up doing in case if the range is broken. So this is one basic criteria what I would say you can have for adjustments. So mark the nearby support and resistance such that, so even though you reach those levels, you actually won't be in a loss. So the short straddle should actually end up giving you profit unless there is, let's say, an IV spike which is actually going to make one leg bleed whereas the other leg won't end up decaying. So, with this, now I'll just be telling you what you can do in case your levels are breached, right? So, assuming that the market actually ends up breaching 40,400, right? And it moves above 40,400 and starts moving towards 40,500. So once that happens, so I know for a fact that even if the market breaks 40,400 and starts moving higher, so here I will have to come slightly to a bigger time frame. So let me just do that by changing to 15 minutes. So even though the market actually breaks 40,400, it might face some kind of resistance, maybe around 40,600 or even 40,800, right? So market has broken 40,400, and I know that market can face some kind of resistance around 40,000, either 600 or 40,800. So, very simply, based on how the movement is, so how strong the up move is, right? I am going to simply convert, that is, I'm just going to exit this 40,300 call option and very simply add a 40,600 call option.
Okay.
So,
So basically, you are rolling your
right,
call
right.
upwards. That is, whichever side is being tested or whichever side is at a
Yes,
loss, you
yes,
cut that leg and move it
yes,
up or
up
down.
or down depending on whether it breaks on the lower end or the higher end.
So, yeah,
So
got
this
it.
way, I will tell you what exactly you will end up doing by doing this small adjustment. So you can see the break even here. It is 709, right? If I actually end up putting this leg, you can see it comes to around 888. So very simply, what you have done is just try to increase your probability. This is the only use of adjustment. So you are just going to push the range so much so that, so the thing is, if you have unlimited money, you can never lose money because you can just keep pushing the range farther and farther and farther away, so that you actually never lose money. But since we don't have unlimited money, we should know when to stop also. So the only use of adjustment is that you're simply pushing your break evens farther away. So whichever direction is moving, let's say the market is moving upwards and your break even is here, market is coming here, so you just push it to little higher end and say, okay, now you come here, I'm going to push it here, you come here, I'm going to push it here. But it sounds very simple, very easy to do. But the issue is, every time you do that, you will be reducing your profit potential and increasing your risk. So that is one thing what we should note. So just because we can adjust and push the range wherever we want, we shouldn't be we shouldn't miss the fact that we'll be increasing our risk and we'll also be reducing our profit potential every time we end up doing that. So this is one more thing which we should make a note of. So this is one simple adjustment where you can convert the straddle into a strangle. So now I'm going to share also what you can do further if the market reverses or if the market continues. So I'll be sharing both of them. So once you have converted the straddle into a strangle, right? So now there are two possibilities. Let's say the market has crossed 400, it is trading somewhere around 500, and you have created a short straddle at, short strangle at 600, or let's say we created at 800 itself. I'm just going to make this 800, right? Just to be on the safer side. So market is somewhere here,
Okay.
and you have created a short straddle short strangle 4800 and 40,300. So what we should note is, whenever a range is broken, right? So after a long time, let's say the range is broken, so the bulls finally manage to break this range and they try to take it higher. So when this attempt is made, usually the bulls don't want to give up this level, because after so long, after trying for multiple times, they have finally broken this level and they have taken it higher. So once that has happened, they do not want to give up this level, because why do you want to give up something which you have tried so hard to capture, right? So the thing is, the assumption is that they are going to try to hold this level as much as possible and they won't let it break this. So the idea is, whenever a resistance is broken, so the bulls are trying to hold this particular level and they are going to take support whenever the market comes here, because the risk to reward is also good for going long. Many people are going to go long and try to take the market higher. Similarly, on the lower end, the same argument holds, that after breaking the support, like after market, let's say market has taken multiple support and finally the support breaks. So the thing is, the bears do not want to let go of this level so easily. So that is what we can get to see in this. around 41,700 level also. So let me just come to daily chart, right? So you will get a very clear picture around 41,700 level. So we have marked quite a lot of things, but what you can see here is this level of 41,600, 41,700, right? So you can see it was a high which was created in 2021 November, and finally it retested in September, and they couldn't cross this, and finally in 2022 November, after multiple attempts, they broke this. So once they broke this, the market saw a fantastic rally towards 44,000. So it,
So, Saketh, you have all these levels marked on your
which
charts?
one?
I mean, you keep important pivot points, important levels marked on
Actually,
your charts for
nothing. So
analysis?
we usually keep our charts plain. Just that back of our mind, we do recall that okay, these were some important levels whenever it comes over there.
Okay.
All right. So the thing is, again, you can see here, as soon as they tried to breach this level, immediately the bulls were like, okay, so I have broken this after 2 years. I'm not going to let you take this out so easily. Yeah.
Previous resistance
So
turned
as soon as
support.
they came here, we saw fantastic buying. And again over here, multiple times the bear actually attempted to send it below 41,600. So we are looking this on a daily chart. So they were unable to do it, and they again sent it back up. So once the this particular level is broken, right? So we are talking about when a resistance breaks on the higher end and the market re-enters the particular level, right? So when that particular thing happens, two things are going to take place. One, the bears who were selling are going to get aggressive, and the bulls who were trying to support the market are going to lose confidence. That means whenever a re-entry occurs into the range, most likely they are going to expect a pretty big selling to continue. Let's say the market breaks 4400 and goes all the way to 4500, but if it manages to re-enter this range 4400 or 4380, whatever it might be, so then we are going to see some selling pressure intensify. So this pattern occurs over and over again, even if you actually go back and look at chart anytime. Similarly, it's the same case with this thing support also. Let's say when there is a support turn resistance, when the market re-enters the range, so generally we are going to see the bears who were short run for cover, and also bulls who were trying to push the market become more aggressive and send the markets higher. So this is one thing we should always have back of our mind, because what happens is generally when we enter short straddles or short strangles, the issue is people usually when they trade, they, without knowing, they enter into sort of a delusion. So right now the market has broken, so even if it is entering back into the range, they believe that somebody is going to come and save them and take the market higher. It might happen, it might not happen. Just that you have to look at the, you have to look at each moment as a so you can look at each moment as a particular scenario. So I would like to call it a game, right? So at this particular point in time, whether you have higher edge by going long or by going short is something you have to determine at every single point. So at this, if the re-entry is done, is there a higher? Yeah.
So, Saket, one thing to ask, sorry,
Yes.
it just came to my mind. So,
Hmm.
while adjusting, do you have any kind of hard stop losses? Like if a loss breaches a certain level, if a loss becomes this big, you will exit the entire
Yes.
position and just
Yes,
stop
yes.
adjusting.
So I would be, yes, I had actually planned to come to that during the exit part. So the thing is,
Okay.
irrespective of whatever the position might be or whatever might be happening to the markets, so I wouldn't hold any position once the loss breaches 2% of the capital at any particular moment. So the reason behind this is fairly simple. If you can control your losses from getting big, right? So it wouldn't be hard for you to recover them. So because you know how the number game works, if you lose 50% of your capital, you would have to double your capital to get back to the break even. So let's say from 100, I came to 50. So now if I have to go back from 50 back to 100, I have to double my capital. So that is going to be a harder task for me, rather than if I have lost 2%, I might have to do 2.05% to come back to the break even. So, and not just that, your psychology will also be in a very good place if you end up cutting your losses small, because you know for a fact that you can definitely end up recovering if the loss is not beyond a point. So the fair idea is, you must first determine how much are you able to make in a month. Let's say you're able to make in a month, say 2 to 3% or 3 to 4%. So now you know for a fact that, let's say you're making average of 3%. So if you let your losses run bigger than 3%, your entire month is gone. So just think with that perspective. So if I let my loss run bigger than 3%, my whole month is gone. So that means in 1 month, I would have generated zero returns. So instead of that happening, if I just cut it at 1.5% or 2%, in the worst case, I can still expect to come to positive by end of the month. So this is one basic rule what we follow. How much are we able to make in a month? So depending on that, we determine, okay, what is the worst case scenario that we are going to take a hit in a particular trade.
So, Saket, this was about cutting your
Yes,
losses short, and I think it is obviously very very important to
right.
protect your capital. Now, do you also do something to protect your open profits? Like, do you trail your profits? Do you book out at targets? What is the kind of mechanism you follow for trade
Okay,
exits?
so here I would definitely suggest trailing the profits. So why exactly I am telling suggest trailing the profits is, most of the times we personally don't do it ourselves, right? So that is the right way to do it. Generally, we like to write the full profit as much as we can, but it is often proven that it's better to trail the profits. So why I am not telling this as a rule is because if I don't follow it myself all the time, it is not right for me to tell somebody else to do it. So I know this is the right thing, but many of the times we do not trial the profits, but rather we try to like suck all the juice left in the premium. So that is not always proven to be a prudent approach, but most of the times maybe it's a bad habit which we have to also definitely improve on. But again, trailing the profit is a best way to go, I would say.
Saket, do you do these trades intraday, positional, or
Both,
both?
actually, all. The thing is, since I still haven't completed the adjustment part. So one thing is, the adjustment, irrespective of whether it's intraday or positional, happens to be the same. So we don't adjust positional separately and intraday separately. We generally adjust all of them the same way. So now the thing is, let me just quickly sum up the adjustment, right? So if it is re-entering the range, we simply convert it back to the straddle once more. So because we know that again in the lower end, this is going to be the support, this is going to be the resistance once more. So we are simply going to cut this leg and add back our 40,300 and convert this into a short straddle. So at this point, you might be at a very small profit, or you might not be at a profit at all, or you might also be at a fairly decent profit. So we don't know at what profit you might be at that particular point. It is hard, like it really depends on case to case. So, but one thing I would certainly say is you won't be in a big loss. So that is something which I can certainly say, right? So either it would be small profit or a decent profit, or no profit at all, or even a small loss, right? So you will be putting it back. Or in the other on the other hand, let's say the market ends up going higher all the way to 40,800. So here we generally end up rolling our puts higher. So when the market starts to move higher, we don't mind rolling our puts from 4,300 to 4,400 or even 4,500. So end of the day, even if it requires us to create one more short straddle at 4,800, we would be more than happy to do that. So very simply, to summarize the whole thing, uh, you mark a range. Once the range is broken, you identify where is the next support or resistance, convert the straddle into a strangle. So now, as the market starts moving in a direction, you just start moving in closer. And again, if you have to maybe create a short straddle, that is absolutely fine. So now, beyond this, I don't suggest adjusting. In case if it is breaking the range, in case anything is happening, I would just suggest you to come out of the trade. That is a very simple approach to take. And also, I would suggest you to come out of the trade once you realize around say, because straddle, even though the maximum profit is shown as 10,000, so you should be either really lucky or really smart or really dumb to get this 7,000 sorry 7%. Why I'm saying really dumb is like or I wouldn't say so there are two people who do nothing if the market moves up and down. So one person who doesn't know anything, and one person who is really smart and he knows the market is going to come back. So unless you're either one of them, so you can wait to get this full 10,000. But in practical sense, it is not possible because you're going to react to up movement.
Sakit, what about days like expiry day where you have the potential to, capture the
Yes.
entire premium? Do you follow a different approach there or does it remain the
Mostly it
same?
remains the same because, for example, today I will tell you one mistake what we did in that trade. Right. So we had a fairly good trade in FinNifty. So I will explain today's trade itself what mistake we made towards the end, and we actually ended up losing close to around 1% today. That is almost close to 5 lakh. So let me just go here. Okay, talking about our FinNifty trade today. So, since I have opened the FinNifty chart, so you can see that the moves were we saw quite volatile moves in FinNifty, and it was quite easy to trade up until the afternoon. But these two moves really actually caught us in a bad situation, right? So initially we were at a 18,050 short straddle, and while the market was trading around, we were able to capture some significant premium. And then the market slowly started to come down. We did see that, okay, the market is unable to hold at the higher levels and it is showing some sort of a weakness. Then we simply ended up creating a 18,000 short straddle from a 18,050 short straddle. Again, that was a good move, and the market was trading in and around 18,000. So now to play it safe, we cut the 18,000 short straddle, we booked whatever profit we had, and simply created a short strangle, that is 18,050 and 17,950. So again, you can see here, we are not just, whenever we feel at whatever point we are uncomfortable holding a position, we are just shifting it. So if we want to play safe, we are converting into short strangles. If we feel that, okay, the market direction has changed or the market level has changed, so we are simply shifting the entire straddle. So at this point, whenever the market bounced, we just use the bounce to shift lower towards 18,000 short straddle. But the issue where we faced is we had converted into a short strangle while the market fall came. So here we were very quick enough, as soon as the day's low was taken out, to convert this entire short strangle into a 17,950 short straddle. So no issues here as well, right? But while this bounce came, so we added some more quantity around 17,950, and everything was going quite well. But just because we were little aggressive, and this move came right at 3 o'clock. So this was a 40-point candle, and the move came at 3 o'clock. And we thought, okay, 18,000 might not break and markets might hold 18,000 or end below that. But what really happened is the next candle, which almost went till 18,010, right? So this made us forcefully exit. So there are two reasons why it made us forcefully exit. One, we had increased the quantity. Second, whatever profit we had made. So not just we lost the profits, but we also lost more than what we had made because of the increased quantity, right? So you can see that all the three decisions what we made, that is creating a 18,050 short straddle, was a good decision. Then converting it to a 18,000 short straddle was again a very good decision. Then converting the whole thing into a short strangle was good. Then creating another short straddle was also pretty good. But it just took us one bad decision, and one bad decision of increasing the position size and not cutting the calls or puts for that matter on time, really took out all the profits what we had made throughout the day by.
I think there are times when you
Yes,
just can't help. As in a move like this, where the market just quickly moves down and then recovers entirely in the next few minutes, next few
right,
hours, you just
exactly.
can't do anything. I mean, this was a late afternoon move, and you have to adjust. You can't keep
Yes,
sitting on your positions
yes,
because you don't know what if the market went down
true,
further
true,
100 points.
true,
What then? So I think you just need to adjust. And when days like this happen, as you said earlier, you have a hard
right.
stop loss for your positions. You have a hard exit point as well. So you take that and wait for another day to favor you and to make
Right.
up for the losses.
So, like how you rightly
So
mentioned, that's the reason why we had to exit, and the entire position went for a toss. So the thing is, these are, and again, why I gave this example and why I am sharing that we went to a loss is because no matter what adjustments you do, no matter how good you are with your view, right? Some days it is inevitable that you have to book a loss, and you have to come to this frame of mind that booking loss is not bad. So you're not, it's neither I don't know why there is so much stigma about people making a loss. I feel that it is absolutely okay to have a loss, so as long as it is within the control, so you should be uh, more than happy to.
Saket, how much return do you make using these strategies? What has
So
been your
generally,
performance like?
we aim to do somewhere around anywhere around 8 to 10% a quarter. So we aim for around 35 to 40% a year. So that is our aim. So that is around 3% a month, I would say. So that has been our aim consistently. So the thing is, there are two things what we look at. So when I say 8 to 10% a quarter, so I also include the equity investments in this particular point, right? So now the aim as such is fairly simple. Make 2% in a quarter, sorry, 2% a month from your trading. Make 1% from your investment. So that is going to be 3%. But luckily, so over the years, we have always outperformed what we aim to achieve. So consistently over the last 2 3 quarters, we have been able to achieve well over 13 to 14% per quarter, excluding the equity investments, because equities haven't done well in the last 2 quarters.
So, guys, Saket has shared his, I won't say secret formulas, but yes, some secrets to the trade, how he trades, how he manages position, how he enters and exits. And I think it's just to give you an idea of what all can be done. Like, there's no point giving you an exact system because each of us
Right,
manage things differently, manage things at different levels. Some of us are risk takers to a greater extent. Some of us like avoiding risk, so you'll manage quickly. Some
exactly.
might manage late, so that depends on you. But yes, Saket, thanks a lot for giving us a framework within which we can trade straddles, within which people can make
Right.
adjustments, and I think it's great that you shared
And I
all this
just
knowledge
have
with
one
us.
more closing comment, Arjun. So the thing is, whatever I shared right now, right? So it is based on experience. And one thing I would say is, using this, you can't make profit unless you practice it, right? So the thing is, many people can actually end up trading better than the best people who do straddles out there if you are able to judge the market in a better way. So what I would say, it is mostly about, it's very little about the strategy as a whole or adjustment as a whole. So if I have to summarize the entire thing, whatever I have discussed till now maybe just contributes to 10 to 15% of the overall profitability what it might give you, that is the straddles and the adjustment. What really brings you your profitability is your frame of mind. So when do you enter? Are you adjusting? Are you cutting your losses on time? Are you booking your profits on time? So these things are actually what determines whether you are going to be profitable in the long run or not. And it has very little to do with the strategy what you follow.
So Saket was the guy Bruce Lee referred to when he said that he fears the man who has practiced his kick 1,000 times. So Saket rightly said that practice is a must, like any other field. You need to trade this strategy. You need to do it day in, day out. That's when you learn the secrets of the trade. That's when you realize what all you need to do as an individual to make it successful. Thank you so much, Saketh, for joining us today and sharing so much
No
valuable
problem,
knowledge with
Arjun.
us.
It's my pleasure, and thank you so much for having me on the show.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.